California regulators have closed down Silicon Valley Bank to protect insured depositors. The State Department of Financial Protection and Innovation says insured depositors will have full access to their deposits no later than Monday morning. SVB Financial Group, parent company of Silicon Valley Bank, reported earlier today it is looking for a seller. Investors have been pulling money out of the bank, which resulted in its stock tumbling. The FDIC now taking over. The bank closed by regulators. Banking experts say SVB's issues are unique to the bank. This is not indicative of wider problems within the banking industry. Big banks have significant cash reserves, but those stocks are down anyway. So much so, Secretary of the Treasury Janet Yellen is weighing in on this. She met with the Fed, the FDIC, and the OCC leadership today to discuss SVB. Treasury says Yellen, quote, expressed full confidence in banking regulators to take appropriate actions in response and noted that the banking systems remain resilient. So let's bring in a friend of the program, Zain Jaffer, tech investor and analyst. He's been following this story very closely today. Zain, thanks so much for being with us. And correct me if I'm wrong. Is it safe to say this took many by surprise today, including you, maybe?
Yeah, this is the 2008 moment for the startup ecosystem, and it's the second largest financial situation we've seen. It was a surprise. You probably have, we started seeing the news yesterday, and the news was really poorly timed. And I think that's part of the reason we're in this situation now. We're talking about an announcement a day after Silvergate collapsed. Silicon Valley Bank announced this. And when you say to the public, don't panic, what do you think the public are going to do? What do you think startups are going to do? They're not going to take the risk. They're going to do a run on the bank, and that's what we've seen unfold. So in some ways, are you surprised when someone that you look up to in the banking ecosystem that you entrust with your money says, don't panic? Are you surprised if people panic? Probably not. But I'm shocked at the scale of the impact here and the uncertainty that now lies forwards.
Yeah, it seems like some, like Janet Yellen, though, are, urging caution, saying the underlying system remains strong. But Silicon Valley Bank, it was the nation's 16th largest bank. To your point, this was the second biggest bank failure since Washington Mutual went under back in 2008. We all remember that. But what does this do? You were kind of alluding to some of these concerns with the startup community itself. Is this going to spook investors? Are they going to want to invest in the startup game as much as they have been after this fiasco?
If you want to see where things are going to go with SVB, you've got to look at where they've come from, and they've got a 40-year legacy of supporting startups. I founded a startup. Back in the day when I was an immigrant and I came to the US, SVB had my back. We only had so little cash in our bank, and SVB came to us and gave us a venture debt loan, which allowed us to keep growing, raising more and more money. Eventually, the company sold for $780 million. But that type of outcome, that type of help isn't possible if a savior like SVB isn't there for startups. And this is a very sad moment for many people in the startup ecosystem because SVB has been there for us. Many founders also know SVB has banked them when no one else is willing to bank them. They're there as a helper of people that have illiquid stock. And they've spoiled a lot of founders. They used to take people to Lady Gaga concerts, and they had a nice box at the Warriors Stadium in San Francisco. They really understood how to work with startups. And with them no longer around, I do get concerned about what the future looks like for the early stage ecosystem and what it currently looks like for poor startups that have their money stuck in SVB.
Okay, but Zain, and correct me if I'm wrong, was the writing on the wall for this failure? Because just as of late, this was a bank that was ranked in Forbes as a good bank to do business with. Many, people who watch the industry very closely were saying to buy SVB stock as of late. So I'm struck by how quick this all was precipitated.
Look, you could say the writing is on the wall, but that's only now when the fog is clearing and we have the benefit of looking in hindsight. There were some poor treasury management and risk management issues made at the bank. The fact that they grew very fast. They've quadrupled in such a short period with so much froth in the venture ecosystem flowing to Silicon Valley Bank. They had to put that money to work somewhere. Their mistake came down to the fact that they put too much money in long duration treasury bonds and mortgage-backed securities. And anyone that knows basic economics knows if you don't ladder carefully, if you have all your money tied up in long-duration securities, guess what happens when interest rates increase? The prices of such securities drop very significantly, especially if they're long duration. So that was the issue. And I don't want to scare you, but the writing might be on the wall for many other banks that are in the same predicament. Some banks have the luxury of not having to mark to market their long-term portfolio of treasuries and bonds. And what we're seeing unfold here is SVB trying to be conservative, trying to take the lead and say to people, look, we sold some of our portfolio of long-term securities at a loss. We're a little bit concerned about the fact that the startup ecosystem is under stress and deposits are decreasing. Yeah. So we're going to go and do a primary offering and sell some of our stock. And that's when contagion spread. It was a series of things. Okay. I don't think we'd be having this conversation if they had done a better job with communication, maybe timed it a little bit better. The day after Silvergate collapses, seriously? That's the worst timing possible.
Wow. According to the Associated Press, they said shortly before noon Eastern, the FDIC announced it was shuttering the bank. Apparently, in situations like this, it's customary for the FDIC to wait till close of business before announcing any such action, so we can, read that for what it is. I want to put up this tweet from Fox Business's Charlie Gasparino, because now the question is, are there sellers out there who maybe can salvage the bank and take it over? He's reporting JP Morgan is said to be uninterested in buying SVB Financial, given its experience with Bear Stearns back in the day. And so he's reporting on this. Do you think that's where it goes from here? Is it going to get bought?
If it doesn't get bought, the Fed has to step in. Their job is to ensure the stability of our financial system. If all of these uninsured deposits and the creditors are not made whole, we are going to lose our trust in the banking system. If we lose trust in the banking system, guess who's next? A whole series of regional banks. You're going to have banks like First Republic and smaller banks that people are going to do another run on the bank. And I don't think the Fed wants to see this happen. And you might look at the headlines and see, okay, so SVB, it seems like the FDIC has stepped in and is helping people with insured deposits. Break that down for a second. Did you know that SVB has 97% of its deposits are not insured? They are far above the $250,000 FDIC limit. So SVB is one of the banks that has a lot of exposure, but people are going to be looking under the curtains at many other banks unless the Fed steps in or unless there's a white knight and savior. Now, I know many of the senior executives and even some founders of other banks. They are having a real blast right now. Their websites are struggling to cope with the demand as people are desperately trying to get money out across to them. If you are a major bank and you're looking at SVB, do you really want to go in underneath this chaos and try to buy these accounts when people are calling your phone nonstop trying to transfer money to you?
All right. Just lastly, though, Zain, what if you do business with the bank? What if you had deposits in the bank? What are you thinking right now?
I have startups that I've invested in, our VC fund has invested in, that are in this predicament. They weren't able to pull money out fast enough, and they are clueless as to what's happening. We've been assured, at least as far as that $250,000 go, the FDIC is there, and on Monday we'll be able to withdraw the money. Right. However, what happens with all the rest of the funding, we don't know. That might be a long wait. There's concerns that creditors might not be made whole. And in the interim, whilst that's happening, these founders, they don't know how they're going to make payroll. There are certain mergers and acquisition deals on pause right now. Term sheets are being pulled right now. And if this continues, you're going to have a whole sway of the tech industry, which, by the way, SVB says 50% of startups bank with them. These startups, if they don't make payroll, if they can't be a going concern, you're going to see a contagion effect. And then we will start to see mass layoffs in the tech ecosystem, which we haven't seen yet on this scale.
All right. Kind of dire predictions there. Zain Jaffer, as always, we appreciate your insight into these major headlines, and we'll talk again. Have a good weekend.
Thank you.